Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning, good afternoon, and welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. And here at Develop Your Edge, Anthony does a great job of explaining how to become a better trader. What is your edge, how you can develop it. Today's no different. We have a great topic today. We're going to be talking about trading the micro treasuries on NinjaTrader. My pleasure to welcome back to the show, Anthony Crudele.
Tom, everybody, how's everybody doing? I'm excited to talk about this topic today because I think that interest rates are probably one of the most difficult things, I think, for day traders to get into, because when you look at the ZN, you look at the 10-year, 30-year, 2-year, 5-year, you're not really trading the rate. And so psychologically, when you think rates are going up, you would think to be long, but really you want to be short. And so CME came up with a product, I think maybe 2 years ago, called the Micro Treasury futures. And what I really like about them is a few things. One is from the 2-year to the 5-year to the 10-year to the 30-year, they're all the same contract size. So they're all $1 per tick, which I think is great because it's really easy, because when you look at the 2-year, 5-year, 10-year, and 30-year futures, they're different tick increments, and they're also tick values. And so that also could be confusing if you're a newer trader wanting to get involved in interest rates. And also it's just the rate. So right now I'm looking at the 10-year, it's 4.218. And so that is the actual rate, based on the futures right now. And so if you think rates are going to go up, you can get long. If you think rates are going to go down, you can get short. And so I think that not only are these a great day trading product and swing trading product for traders looking to get involved in interest rates, I think it's a great product to have up on your charts, because you can see if rates are moving up or down just by looking at the futures market, which is different with the ZN. With the 10-year, like I said, if it's ZN's moving down, rates are going up, and then you can't see how much the rate's moving up, right? Because it's a calculation. And so this just makes it super simple for people to step into the interest rate markets, whether you're going to trade them or not. I mean, I think that with any market, you're going to take some time and review them and see how they move. But these markets, these treasury markets have been moving quite a bit this year. I've talked a lot about them and rates versus Russell, and we're going to talk about that today as well. But I just think having everybody understand the basics of interest rates, I think that these micro treasuries are a great product.
Well, and you mentioned it. They've been in interesting movement this year. Jim talks about usually the treasury futures tend to trend, right? They don't have a lot of chop to them. They're trending markets. They're considered the smart money in the markets, and they're the most the highest volume traded futures. So I think that's such a smart thing that the CME did, which was to introduce these rate futures rather than forcing you to try to figure out, well, inverse, what does this mean? Rates are up, this is down, but then you switch over to the E-mini or the Russell, and then rates are up. What does that mean for the stock index futures? You're going from different markets. To switch that polarity is really not easy. So this is a great addition to the CME.
Yeah, and with everything that's going on with the data every day and how sensitive everything is to interest rates, and how everyone's talking about in the macro world is the Fed going to be cutting rates? Now there's conversations of it that maybe they're going to be raising rates. We've even discussed this year, Tom, where I said, looking at some of the previous data, maybe they don't cut this year. I mean, that's kind of going to be the surprise trade. And I think that ultimately you're seeing that in the tape, right? And so if you feel that you have an edge, or you want to look at a chart and look at rates and actually be able to go out there and trade the actual rate, this is the path for you in these micro treasuries, because to me, you can really pinpoint where you would think a rate would go versus where the 10-year would be and what the rate would be. I think that's the most difficult thing. If you're somebody who's thinking about rates and you're saying, well, if the 10-year gets to 4.5 or if the 10-year gets to 4%, I actually think it's going to hold 4%, or I don't think it's going to get above 4.5%. Look at what it's done, right? I'm not too keen on actually charting the rate. I know a lot of people do. I am, maybe I see what you think about this, Tom. When I get into the charts today, I actually will chart the 10-year a little bit more and say, look, I think they're going to hold here, and then I'll go to the rate. Like, I don't really feel that technical analysis per se on, a 10-year rate that's trading in, between 4 and 4.5%, we'll call it, is the most technical type of looking market, which is why today we're going to talk about 10-year, and we're going to talk about how I'll use both of them to help me with my trading.
Well, as a having the experience with charting, I agree. When you're talking about price versus rates, and you're talking about a market that's been around for however many years, what, 40 years, 40 plus years, versus something that's new 2 years, it's easier to say, like, okay, it's just force a habit to look at a chart from the ZN or ZB and say, this is where I want to chart it and use my analysis, just because there's that much more data and that much more volume. And then, switching to the rates after you make those decisions, those conclusions, I think that's a way to go.
Yeah. And, let's dig into the charts a little bit today. What I want to do is I want to give an overall landscape of the market, and I want to talk about an overall approach to trading interest rates. And so I think that most traders come into the marketplace and they're coming in and looking at E-mini S&P or E-mini NASDAQ. I mean, I even think that the Russell and the Dow are two markets that not a lot of new traders or even traders that have been doing this for a few years, like some COVID traders we'll call them, are too keen on coming in and trading Russell and Dow. I think that is also something that maybe we'll discuss in an upcoming show. But I think that when you look at the overall landscape of why traders come into the markets, most of the time it's indexes, bottom line, right? But you have to understand that when you come in and you're trading indexes, especially futures, like if you're trading the S&P or NASDAQ, that you have to know that in the short term, because most of people that are going to be day trading futures are going to be in the short term, the rates market's an important market to watch. Now, I'm not saying that ultimately, that the rates will lead the futures, because I know that you even commented and said, oh, the rates are the smart money. So I would almost say that I wonder if that's still the case in so many ways with the amount of trading that goes on in the indexes. I kind of get torn in between them, because sometimes rates will lead me to the poorhouse trading the S&P or Russell versus the S&P and NASDAQ and Russell just want to go higher. And it's kind of like, is that the smart money kind of thing? But ultimately, I look at it as what's not happening on your chart and why a market is moving, and the why itself it's important, but it's not the end all be all. And what I mean by that is that sometimes you're going to see this erratic movement in your market and you're going to go, well, why is that happening? It's not always important to find that reason, because sometimes the market just isn't cooperating with your strategy. But if it's rates and you see that rates are moving up or down, and they do matter on that day, that's a real edge in trading, because there are going to be days that I have seen this year where rates are going down and Russell's just going up. Rates are going up and Russell's just going down. S&P and NASDAQ, not so much, but there are days that happens too. You go back and look at the CPI. The day that the rates really rallied, and I don't know exactly how high, we'll have to look at the chart here, what the exact print high was on the 10-year, but rates were going up quickly. That impacted all the other markets. Now, maybe some will say, well, it's because of the Fed or whatever. They're maybe not going to cut as much. But yeah, the rate markets, when they were going up, you could see that direct correlation. And that was a day that they were actually leading the indexes. And it's important to understand that whether you're going to be trading rates or not, I think that these markets are important to keep up as traders. And so what I'm starting off with is just a Russell daily chart here. And you can see, so I'll give a little context on the Russell too right now, what I see here. Russell, everyone knows that I talked about boxing out my Bollinger Bands, and I use my 30, 50, and 70% line. Russell is now hugging above the 5-day moving average, finally starting to see that. You're starting to see an expansion of the Bollinger Bands higher. To me, the Russell is looking pretty strong. Okay. And the Russell is the one that I think is going to outperform NASDAQ and S&P right now. I think it's playing catch up. I think technicals are starting to show, firmness. You look at the last couple of days, yesterday and into the prior day, it was like, oh, could it happen? But now you're actually got that little bit of separation from the Bollinger Band. And I think you could see Russell continue to go higher here. And why I mentioned Russell first is because I immediately want to go and see, what is the 10-year doing? And I say that because I want to look and see what do rates look like, right? And you can see that rates have been coming down, and you can see that their volatility is expanding here, or actually the 10-year's been going down, so rates have been going up. But the 10-year looks like it might start getting back above this 110 ish 06 area, which is where it's sitting right now. It's actually a little bit higher when you look at a fib. It's not exactly right. It's probably like 110.17. If the 10-year starts to firm up here and gets back above this moving average, that will give me confirmation that rates are coming down. Now, once again, this is where the confusing part comes in, and you say, well, oh, I have to look at the 10-year going up versus rates going down. This is why I brought this into perspective. If you go and you look at a 10-year and you look at what's happening in the 10-year, which is the 10Y, and you'll see that's the 10YG4 is what I'm looking at right now here on Trade-Evate. I know we're looking at Ninja charts. Now you can see rates are going higher a little bit as we speak right now, but ultimately they've gone lower over the last session. And so the 10-year, this is the one you want to be watching versus the ZN. So when you look at the market and the Russell, I want to see, what does the Russell do if rates start to come down? Does it accelerate it? If rates coming up, can it keep going higher? Now, I talk about this as a correlation because there's two parts to this. One is if the Russell starts catching a bid and the rates stay firm, that shows true strength in the Russell, right? So it shows that the Russell is basically ignoring the rate, but rates are going up, so you have to be cognizant of it. If all of a sudden rates start to come down, that could accelerate the rally in the Russell. And so you have to look at correlations in a couple of ways. One is it correlating with it to accelerate it? Is it ignoring the correlation and getting people that think if rates are going up, Russell should go down and the squeeze could be higher? And the reason why I say that is because you've seen a lot of days this year where you've had divergence with rates, but then rates all of a sudden matter a lot. And so it's one of those things where it matters until it doesn't. And so you can't solely be looking at rates versus Russell and saying, okay, rates are going up, I want to short Russell. No, because if the Russell's ignoring it, that's also showing the strength in the Russell. And I know I'm getting a little technical here with this, but I think it's important because I want to make you a better trader, right? And so this is why I'm saying when you want to look at rates, because sometimes they're just not going to matter and other times they're really going to matter. And ultimately, it all comes down to your execution. So if you are trading the Russell or even the ES, I don't think NASDAQ as much matters, but you want to make sure you are keeping an eye on the rates and what that correlation is. And so the 10-year, the 10Y, like I said, 10YG4 is what we're looking at in Trade-Evate when we get to the trading aspect of it, is important to note. Now, let's look at the ES, and I'm just going to kind of give just really some commentary on this as well. When you look at ES, it's starting to get back above the 5-day moving average. It's starting to push above my Bollinger Band, showing some bullish action, even though above my fib retracement. But the Bollinger Band is pointing down. So I think that the ES technically right now is in a bit of a struggle to see any sort of really sharp move higher versus the Russell. Okay. And I say that because of the way the Bollinger Band is. If the Bollinger Band starts to point up and this starts to go up with that Bollinger Band, I talk about range expansion. Then you would look at S&P, I think, has got better legs. NASDAQ, this is interesting right now. When you look at what's happening in NASDAQ, it's above my fib, which I talked about, 17,680, I thought was key. I thought we'd rotate below it. We didn't. NASDAQ, to me, really looks boxed in up here. Anytime you see a market sitting with a flat 5-day moving average and sitting above, I look at my 30% area, it's grindy higher, but I think it's limited to the upside. And so to me, the Russell is the play right now. And when we go back to the Russell is the stronger one. You've got pushing back above this 30%, getting near the recent highs, Bollinger Bands outward, which means really keep an eye on rates. And I know this is a rate show, but this is why I think that the rates are so important to watch now. Now let's take a look at the ZN. So we looked at the ZN and the daily. Now here's the way I would look at it on an intraday basis and how I look to trade it. So I look at the or the ZN and the 10Y really on a 30-minute basis. Now, I don't look at these really in the short term. Here's the one thing when you're trading rates, like a 3-minute or a 1-minute, like you're trading an S&P and NASDAQ, I am really advised against that. I mean, unless you're super short term, is going to be scalping 10-year, which is, this is not shows for that. This shows for trading the 10-year micros. I think that you've got to widen your time frame a little bit, even as a day trader, and you want to look at it because going back to what you had said, Tom, they trend a little bit more. And when you go back and look at what's happened a lot of days in 10-year, now this is the regular trading hours looking at a 30-minute chart, and you go back to this CPI number, which is kind of crazy, right? They tend to stay above or below a VWAP for a really good portion of the day. And so what I look for is, okay, are we establishing ourselves above or below the VWAP using my standard deviation bands, and look at where we are on a relative basis, right? And just see, is it just trending in that direction? This can help you with bias of direction of rates for the day. This could also help you for trading it. And then I look at it and you go back and look and see, I mean, you can go back and look, you see this is color coded. So every time we're below the VWAP, it's just, look, you can see it's a red VWAP. It's very seldom do you see shifting in colors, right? Versus if I pulled up a NASDAQ right now on this, like the NASDAQ is always stop hunting on the outer edges. I actually talked about that in the scalping show. It like searches for 3 standard deviation moves around VWAPs versus a 10-year, very different psychologically, the way that I trade this. And so when you look at today, you could see, so the ZN was below it and the 10Y is above it. So what do we look for? What I look for is, if I'm day trading this market, I say to myself, I'll zoom in on the day. Right now, you see my 2 horizontal lines, which is the opening 30-minute high and low. And I like to kind of see that like I would do with my 3-minute. I'm just expanding it out by 10 times because I really want to sit back and watch to see how this market's potentially trending for the day. And you look at the last few bars here, just chopping around the VWAP. Now it's established itself outside a 3 standard deviation move. Now, I don't use the 3 standard deviation moves as like mean reversions back in, because this is a market when you're trading interest rates. I am not someone who looks for a lot of fades back in. I am really trying to trade. Like we've talked about this with NASDAQ or S&P. They'll search for the 3 standard deviation move and then it'll come back to VWAP a lot. Like this, to me, I like to look to see if it's established, and I'm just going to wait to buy the retracement. Now, here's where I think it's really cool about trading these products versus like trading the 10-year. You could look at it and say, okay, you know, our rates establishing some firm ground here around 4.2%. So psychologically, you can look at that and you can relate to that as a trader and say 4.2%. Okay, 10 years trying to hold that. You got the VWAP of 4.21. One standard deviation is around 4.217. And so I look at it when we go to the dome, I want to be buying dips around 1 standard deviation into the VWAP. You know, you can see even each 30-minute bar is made a higher low. And what I'll look to do is I'll typically just put my stop below 1 or 2 of these bars, picking one, and say, look, if we can buy 1 standard deviation here, if it blips back below VWAP, I'll try to stay long. And now I mentioned this on the intro. These are only $1 per tick. So this is my live chart right now. You know, I mean, I don't like just stepping in and doing live trades for no reason, but I want to step in and I bought one there. Now you can see here on the dome, it's only $1 per tick. Okay. So you can adjust your position size to how far your risk is. Now remember, these don't move like NASDAQ and S&P. They're not. That's why I wasn't even scared to buy one right now. And plus it's only $1 a tick. Not that I want to give away $1, but ultimately I look at it and say, you know, I'll adjust and say, if I think that rates have a chance to continue to grind higher on a day like today, 4.217 is really not even that far from here. It might take a while to get down there. That's where I work my bids. And I look at it and say, look at this bar is the one that established above the VWAP, closed above it, retraced back down. You look at this 4.204, I probably don't want to risk much more than that. And so when you look at it intraday, you look at it, even if it were to get down there, you could see, I like the P&L on here so you could see your dollar amount, because you remember, you were learning how to trade interest rates here. You could see how much your risk is and you could put your calculated how many contracts you want to trade. And to me, that's really as simple as I look at it for this type of market, because I only really want to be long on a day like today, because when I look at it, I say to myself, it's holding above VWAP. You don't see a lot of days where it's chopping around it. It did earlier. It's established above it. Now I want to try and ride that train. And, Tom, that's as simple as I keep it. I don't really look too much. Like I said, I'm not super technical when it comes to trading rates, because ZN and 10Y, they're grindy markets. I mean, when they find a direction, they tend to stay that direction that day.
Right, right. And now, you made a great point, I think, which was the correlation of going back to the Russell and rates. And you said we think of them as negatively, I'm paraphrasing, negatively correlated, but sometimes Russell will have strength and it'll trend with rates. Do you find that on days where we get information about what the Fed might do or what data points they might be looking at, that those might be the times where that negative correlation is more apparent? And we saw it Tuesday, right? CPI is hotter, comes in hotter, rates are higher, could be higher going forward, maybe less cuts this year. And the Russell took it really hard compared to the other three stock index futures. Whereas on days where we don't get that kind of information, do you think it might be other factors driving the Russell up while rates are flat or even trending up as well?
I mean, that's the thing, it's this year I think it's tricky, because there's this massive unknown out there what the Fed is going to do with rates, right? And so I think that the Russell is seeing the performance in the S&P and NASDAQ. We saw what happened at the end of last year. Let's go back to November. November, the Russell had the biggest move it's had in how long? Like, it was up like 5% in a day. I don't remember what it was up in a week. It was something ridiculous. I don't know if it was 7 or 10%. Whatever it was huge, right? That was all based on the fact that the Fed not necessarily was cutting rates, was done raising rates. Right. And then all these small businesses can then look at the market and say, you know what? The Russell at this point right now could be bottomed, right? Because rates are done going up. I think that's more of the key factor, not necessarily that the Fed is going to be cutting rates. Now you have this scenario where we're in between this, right? You see from day in and day out, the big macro minds out there, are we going to be cutting rates or are we going to be raising rates? It's actually been brought up, right? Or are they just going to wait till much later to cut rates? And so it's now become this balancing act of where on day-to-days, you just don't know how the Russell's going to react to rates. That's why I said, when you look at it, because it's shifting so fast. I mean, there's no way, nobody could, the days that rates, here's what I would say. The days that rates are moving quickly in a direction, they're always going to have an impact on stocks. Almost always. A day like today, where rates are just kind of grinding a little bit higher, mean reversion back into the prior day, they don't matter as much. I mean, the Russell looks at it and goes, oh, big deal. The 10s one from, right now, the 10-year one from 4 point, whatever it was, 1.8 up to 4.23. Not that that's not a decent move if you're trading it. But the Russell just looks at it and goes, meh, doesn't matter. But if that thing would have won, if it spikes up to 4.35 or 4.5, all of a sudden the longs and Russell go, uh-oh. And so I think the speed and the velocity of moves in rates are where you really have to keep an eye on them if you're even trading S&P and NASDAQ, because they're going to matter. And it just goes back to, look, I bought the one in the 10-year, and I'm going to go back to this chart. I mean, this is why I look at the bands as a guide only really to get in versus trying to fade moves. Fading moves in rates, I have found, is, and I've said this a few times on the show, like the path to the poorhouse, because you don't want to step in front of markets that tend to trend, right? And it's psychologically a different market than trading NASDAQ or S&P. NASDAQ and S&P, we all know this, they love to come back to our price, don't they, everybody? You could be long, you think in a great spot, they come back. You could be short in a great spot, they come back. You're like, this is unbelievable, right? These markets don't trade like that. Not often. They do trade like that sometimes because everything is, temporary, right? Nothing is forever, but they tend to trend a lot more. So if you think rates are going up, or it shows you on a day like today, this is a time where you just sit back. It's a much more relaxed type of a market. For right now, it is. They can still be very volatile, but they're not a market that you're looking for a lot of flipping back and forth in. This is more like, this is why I slow it down by going 30 minutes out, because I'm not going to trade this on a 3-minute chart. Oh, it hits this or it hits that. You're just going to get spun around. And so a long way to answer your question is like, this is where you really separate yourself from a trader versus somebody who just has a strategy, right? Execution. How are you developing your edge? Do rates matter today? Do rates not matter today? I mean, this is the discretionary part that you have to look at and see, does it matter? Is this little uptick in rates today going to have that big of an impact on Russell? It doesn't appear to be so, right? And so I just know that I'll watch it, but all of a sudden, if it starts to move sharply in one direction, watch the reaction in the Russell. Watch the reactions. Don't think just because rates are higher or lower that it's going to have an impact. I think that's the way I live by, because there's a couple times this year I was short Russell and, looking at rates going like, how's this thing not down ticking? You're like, well, buddy, listen, it just doesn't matter right now, so.
Okay, great. No, that's a great answer. Appreciate that. We're running up close to time, Anthony. Do we have anything to talk about with
No, I just think that,
business?
when you look at these products, I wanted to shed light on them and show you the simplicity of trading a rate, the tick value. In my opinion, of all of the products that CME has put forth, I think this is probably the one that when time goes by, more and more traders will start to go towards if you're an interest rate trader, because I think that when you look at the introductory of micros to all these futures products, no one talks about micros for rates. Very few people. And I think that the rate environment that we're in is not going away. I think that whether you're trading them or not, they're important to have up. I think they're a good market to watch for confirmation, or could be a trigger for trends and like see what happens in those markets, and could it impact your markets? And I think that a lot of traders that get spun around in S&P and NASDAQ might find their way to this product. I could see that happening over time. These products are, I think, a very, very good product for retail traders to put their eye on. And I think it's a great alternative if you're struggling in NASDAQ or S&P, or they move too fast for you. This is a product that you may want to take a look at.
Oh, that's great. I appreciate that, Anthony. And for those of you who are watching through the Ninja Trader YouTube site or Ninja Trader events page, where can people find you, Anthony?
You can go to anthonycrudele.com. Got a lot going on there. I didn't mention my Discord this week, but I put my morning note out every single day. This morning, I talked about how Russell is more of the play right now. It's free. You can come in there. You can find your Discord link, whether it's on my link tree on my Twitter, which is at Anthony Crudele, or on my website at anthonycrudele.com. And like I said, we follow up a lot of what we discuss here on Develop Your Edge in the Discord. And we're all trying to develop our edge. So check us out there.
Awesome. Thanks so much, Anthony. And thank you, viewers, for coming to Develop Your Edge this week. We'll be back next week. In the meantime, have a great trading day.